The home construction ETF, the ITB, is having its best day since July 22nd. Our next guest says the rally is long overdue. Let's bring in UBS Homebuilders analyst John Lovallo. John, why is it overdue?
Hey, Morgan, thanks so much for having me. Interestingly, this is sort of the next leg of a rally that began at the beginning of earnings season. And it's something that we had highlighted in our preview note, and our preview note was titled Bear Trap. And really what we were suggesting is that investor sentiment had turned far too negative at a point when rates were stabilizing, consumer confidence was improving, and most importantly, we were reaching an end to the negative earnings revision cycle. So the home builders are up 20% versus the market that's up 3% over that time frame. Now, very interestingly, we have an internal cash flow focused evaluation team here at UBS. Despite this rally, our team says that the home builder stocks are as dislocated as they have been at any point over the past decade. And when they've hit similar levels in the past, the relative returns have been 50% plus. So we have a long way to go.
Interesting. Are there names you like specifically, or do you just buy everything broadly?
You know, it's an interesting question because I think you can kind of ride the wave here. However, we do believe that the first-time entry-level part of the market is still the best place to be. That's where there's the least inventory out there in the market. It's also a buyer that is very need-based, very driven by life events like marriage or children. That would lead us to names like Meritage Homes or D.R. Horton. But we take a barbell approach. We also like sort of the higher end with Toll Brothers and names like Pulte Homes, where they're selling a lot of very high-dollar upgrades and options that are very accretive to margin.
Yeah, and Toll Brothers certainly talked about what they're seeing there and with the resilience of their luxury business and the more affluent customer base when we got those earnings earlier this week. What's the housing data telling us? Are we seeing green shoots here, even as more inventory does start to come online?
You know, I think we are. And what I would point you to is Toll Brothers in their earnings said that traffic in their communities was up 15% year over year, 15%. And their online traffic was up 5 to 10%. Now, this is very consistent with data that comes out from Zonda, which is an industry forecaster. Also, believe it or not, in the NAHB housing market index, the only component that was up was the traffic index, and that was up 2 points. So I think that there is increasing interest. And very, very importantly, Morgan, the intent to buy is incredibly strong. 37% of respondents to our most recent survey for housing intentions said, hey, look, we want to buy a house over the next 12 months. That compares to 32% in the first quarter and the long-term average of 30%. And so the intent to buy is there. What we need is consumer confidence to improve and a little bit of rate stabilization, all of which seem like they're in the offing.